Hey, what's going on, Wealthy Legacy Journeyers? Welcome back to another episode of the Wealthy Legacy Journey. I'm your host, Kendell Leiden, and the title of today's episode is Back to Tortoise Mode. And the reason I picked that for today is anybody that's been watching the show for any sort of length of time has been aware of just kind of this idea of the tortoise and the hare. I've talked about it many times. I've actually got one of the stickers on my water bottle is a tortoise to remind myself that slow and steady wins the race. But I realized that over the last maybe a couple of weeks, months, probably more like weeks. I don't know. You can be the judge of that if you've been watching through all the episodes. I'm trying to think. I think I've lost some perspective on that. And one of the things that I did this week is I got back into doing some reading, and I actually read pretty much all the way through Dave Ramsey's Baby Step Millionaires book. It was a really great book. I really enjoyed it. It gave some great perspective. One of the books that, really got me moving in the right direction on this whole wealthy legacy journey in the first place was Dave Ramsey's book, EntreLeadership. Now, Libby and I, my wife and I, we took Financial Peace University when we first got married, and we actually had a fully funded emergency fund, no debt, all that kind of stuff. And that's not the kind of spending background that I came from, but it is what she came from. We ended up making a lot of poor money decisions because of me. I drove a lot of those decisions. We took Financial Peace University again after several years as entrepreneurs, and I just still wasn't ready to quite adopt it. Read EntreLeadership, and I was like, okay, this guy really knows his stuff. It's not just, a penny pincher who says do this, but I actually went over here and did that and built a business. Like he really is very wise in what he talks about as I've dug into more of his content. And so I've really enjoyed it. So that's where I thought, you know what? I've kind of fallen off the saddle, or really fallen off the saddle on book reading. So not where's a better place to pick back up than a Dave Ramsey book. And so I read Baby Step Millionaires, really enjoyed it. And it reminded me of the importance of being a tortoise. It reminded me, I've also listened to some of the Myron Golden podcast episodes that he's put out recently as I was doing some driving this past week. One of the things I realized is that while I was kind of going through this struggle, and even last week, I was just really beat up and not, feeling very great about myself and what we've been doing, and just kind of like a bad turn of events and some things. I realized that I hadn't been getting anything from any other source other than just myself and trial and error. And I had some coaches, that I was, working on growing stuff with on the stocks, and I still believe that, they're very smart people. And anyways, long story short, I think I was getting distracted and realizing that slow and steady and the tried and true wins the marathon of building wealth. And it was interesting. One of the things that I read this week in the Baby Steps Millionaire book by Dave Ramsey is the tortoise and the hare story. And I want to read this for you guys because I think it's just a really great reminder. So in this conversation, Dave Ramsey was actually talking with a billionaire. Billionaire was like, basically, do you want to hear about the book that's, impacted my life? I've had my kids read it, my grandkids read it, like, impacting me more than any other book there's ever has been. Dave Ramsey's on the edge of his seat, and he tells him it was the tortoise and the hare, and Dave Ramsey gives a recounting of the tortoise and the hare here in his book. A hare was making fun of the tortoise one day for being slow. Do you ever get anywhere? He asked with a mocking laugh. Yes, replied the tortoise, and I get there sooner than you think. I'll run a race with you and prove it. The hare was much amused by the idea of running a race with the tortoise, but for the fun of the thing, he agreed. So the fox, who had consented to act as the judge, marked the distance and started the runners off. The hare was soon far out of sight, and to make the tortoise feel very deeply how ridiculous it was for him to try to race with a hare, he lay down beside the course and took a nap until the tortoise should be able to catch up. The tortoise, meanwhile, kept going slowly but steadily, and after a time passed the place where the hare was sleeping. But the hare slept on very peacefully. And when at last he did wake up, the tortoise was near the goal. The hare now ran his swiftest, but could not overtake the tortoise in time. The race is not always to the swift. And what's really interesting is he goes on to talk about this. Dave Ramsey says there's gold in every line. The tortoise and the hare is not just a tale to emphasize the speed at which you win, but the things that get in the way of how quickly you win, or that keep you from winning at all. Arrogance, disrespect, idleness, neglect, poor judgment, and lack of strategy or focus. And, it's just interesting. He talks about people going through like the Ramsey-ish plan and not being 100% dedicated to it. And I realize that there's a lot of ways that in my finances, I have just been loosey-goosey, especially when we're, making money or had money, and I hadn't been dedicated to at least allocating a portion of my wealth to doing my wealth building journey, just to doing the slow and steady and the boring. Now, does that mean like in his plan, he talks about taking 15% of your annual income and putting it basically to long-term stock holdings, into, ETFs, something like the S&P 500. Do I plan on taking all of my money out of real estate, something that I've been learning for years and years, in order to, fund that as much as possible? No. The reason being is that I do think that there is faster ways to build wealth. However, I'll say on the other end, there is wisdom in having a slow and steady, tried and true, proven path that you're working on the side. One of the things that Dave Ramsey said in this book that deeply impacted me, another thing, was he talked about, if you're going for more than just $1 million, at retirement, that's wonderful. But if you're going to build a business or anything along those lines, having $1 million launch pad to start from, $1 million to $10 million launch pad, makes it a lot easier. And I read that and I thought, wow, that's really good. I know that I've been struggling to build businesses because while, 25% to 50% of my mind is focused on building this business, the rest of my mind is focusing on staying alive and trying to just stay ahead of the curve. And I don't have much money, or I don't have much assets to keep me above water for long. And so I try to tread as fast as I can, and I just can't seem to build a successful business that way. And that's been a lot of what the last 2 year journey has been all about, is staying in a job while I build a business on the side so I can have a consistent income. And it's been really good. A quote that I heard in one of my quiet times this week when I was going through the Bible app, the YouVersion Bible app, in one of the quiet times, one of their daily Bible studies, one of the leaders of one of the mornings said, "A river cannot rise above its own source. It must stay plugged. We must stay plugged into teachers to rise up to their level instead of staying low at my own level." Or I guess he said, "I must." I missed the I. But a river cannot rise above its own source. I must stay plugged into teachers to rise up to their level instead of staying low at my own level. And whenever I heard that, I thought it was really good. Of course, in that moment, he was talking about Jesus, and it's so important to stay plugged into the King of Kings, the ruler of rulers, to learn foundational wisdom and principles from his teaching. And so staying plugged in to teachers like Myron Golden and Dave Ramsey is so important to me because these guys go back to the Bible for a lot of their foundational principles. But also having in my life the Myron Goldens and the Dave Ramseys to obtain wealth of knowledge and information and wisdom from as I go along this wealth building journey. So, The Baby Step Millionaire was an awesome book. I can't recommend it enough. I think it's absolutely amazing. I'm still so excited for some of the things that we're building as far as projects on the sideline. I think it'll perfectly complement, once you get your finances handled the right way, you get that discipline, which I'm still learning the discipline around my finances myself. But you figure that out, you're going to be able to take a small portion of your funds and start, seeing strong returns on a smaller amount of money through different growth techniques. But I won't get into that here on this episode. It just gave me some encouragement of there's nothing wrong with taking it slow, building strong over time, and not just falling into the slumps. So on the real estate front, the duplex that we've been working on in Grand Prairie is actually completely done on the renovations. This week we are cleaning and staging, hopefully taking photos this week, and then next week it will be going live. So I'm very excited for that one to hit the market. And we have another one coming up in Euless that'll be starting up, I think it's the end of December, early January. The presentation's been going really well that I've been working on for the Ambition Group. And the Limitless Real Estate Team is what we're calling it. So Limitless Real Estate something. I came up with the idea Limitless Real Estate Partners. That one's kind of been nixed, but there hasn't really been a better replacement. Limitless Real Estate something. Not sure what the last word's going to be on that one. But anyways, the presentation's been going really well. I've enjoyed it. One of the things that I got encouragement from Dave Ramsey through the book was that your income is one of your greatest assets. And so it's been really making me think about, okay, if I can't get any like significant headwind, over the next couple months on, anything that we're working on, especially on the stock front. Um, you know, Taking a promotion into a some type of marketing role, which has kind of been a talk, to increase my income in that sense, and be able to grow into a new position could be something that would be really advantageous. I could increase my income, therefore increasing my investments, both into boring investments and to the space that I know really well, real estate. Cool thing on the real estate front, I think I shared it. This is on the Double Dare Your Money side. But that Palestine lot that we contracted so long ago is under contract. It was scheduled to close on December 16th, but I learned something. My title company that I'm working with, what are they now? Byers and Taylor Title in Mansfield. They can't get a title policy on it for a year I thought it was 6 months. I think by the law, it's 6 months is the right of redemption period after the sheriff's deed was filed, that the previous owners can come back and file for the right to redeem their property. It's the redemption rights in Texas. I thought it was 6 months. Maybe it is 12 months. I could be wrong on that. But this is on the land that is not ag exempt and doesn't have a structure on it, and which is what this property is. If it is ag exempt or has a structure on it, it's 2 years. So I bought this as a resale, which means it had already been filed with the sheriff's deed, already went to its first sale. That one didn't go through. I bought it for $13,000 back in March of this year, 2024. And yes, that means it's taken me about 9 months to sell this piece of property. But it was good that it took so long, because my 1 year mark is actually December 14th, 2024. But something I learned about title policies is that there's a 10-day, or at least my title company, there's a 10-day lag between the order date and the effective date, meaning that we cannot order the title policy until December 24th, or else, because that'll give it the effective date of December 14th, and there has to be a year from the sheriff's deed filing date of December 14th, 2023 to the effective date on the title policy. So we were originally scheduled to close on the 16th, but we had ordered our title policy on like December 9th, which gave us an effective date of November 29th. So we're just like 2 weeks shy. Well, December 24th is obviously Christmas Eve. And so we can't close on Christmas Eve. We can't close on Christmas. So what my title company is doing is they are going to soft order the title policy to come through on the 26th with an effective date of the 16th, which is 2 days after our 1 year mark. And then we are going to close Palestine on the 27th. I'm really excited about that deal. The margins, the numbers are looking really good on it. And once the deal closes, I have the HUD statement. I'll break it down for everybody. Now, my plan moving forward in real estate is, if something's working, keep moving forward with it. And so we're going to take and reinvest those profits. My parents were on the first deal. They were a 25% equity partner, if I remember correct. Yeah, 25% equity partner. They're wanting to be a heavier equity partner on deals going forward. I've also got someone else who has already expressed interest in being involved if we do any more land deals like this, as I've just kind of kept people in the loop with like what we were doing. And so I'm going to bring them on the fold in the next one. And so kind of building up a little bit of funds here, to be able to invest. And so my hope is to, buy some more properties, somewhere around like 30 to 40%. So we have plenty of cushion. Probably 40%, after the survey costs and everything like that. And so that way, even if we sell the property at 80%, we have a good chance of doubling our money. But it also gives us plenty of margin. If for some reason we're struggling to sell the property, we can lower the price quite a bit and still be in the green, especially when you have a property that's $40,000. Hey, somebody cuts off, or like if you have like for in this case a $35,000 piece of property. Well, if somebody gives you like an offer that's just 10K below asking, all of a sudden you're talking about like a 30% hit. So it hits it really hard, versus on a $200,000 property, if somebody gives you like 10K off of asking, well, it's like 5%. So I really want to make sure that we maintain healthy margins on these deals just to protect us. And so basically my idea is, now that I know the whole process, I've learned some of the don'ts through going through this the first time. Basically on this next go around, I will purchase properties at a tax sale, and then my goal would be to immediately turn around, go ahead and start calling surveyors and get a survey order for each of those properties, and get with a real estate agent who can go ahead and give me a CMA. And then we would be able to get our surveys back and then go on the market before the next tax sale And basically, let's just say I invested $20,000, bought $50,000 worth of real estate. Um, then basically for the next tax sale, if I could get most, if not all of my 20,000 back out, I will be a 50% equity partner based on the work that I did. And then the other 50% of the equity goes to the capital partner. So I'll get whatever percentage of money I have into that other 50%, on that side. So if I paid 20 grand, let's say I can get 10,000 back from other investors. So I have 10,000 cash into the deal. I got $10,000 back out, and it cost me $20,000 of, money to get the deal going. Well, then I would have 50% because of the work that I put in. And then I also have another 50% of the 50% from the equity partners, if that makes any sense, because I have 10,000 of the $20,000 invested. And then other people have the other $10,000. That allows me to then go to the next tax sale and invest more money. So after all said and done, I think we'll have about 30,000 ish dedicated to the real estate side of things, and some 25, 30, somewhere like that. And so I'm excited to see how that goes and what kind of doors that's able to open. On the stock side of things, we had a really rough and tumble time. One of, as I stepped back, I didn't trade for a couple weeks and just reflected on, what happened. What was the correlation between my successes, the timing of it, what was happening in the market. The one correlation that I saw was ChopX, the November ChopX, which is the options expiration, for the monthly options expiration expires on the third, at the end of the third Friday of each month. And so we are now in that window for December. So when I look back at my results from November, the Monday and Tuesday before OPEX, I had a gross gain net loss. On Wednesday, I had a small net gain, a large gross gain. And then on Thursday, crushed it, did really well. Last Friday of ChopX, I was actually out of town. That's when Libby and I went out of town. Can't believe it's been a month ago now. And then Monday, Tuesday, Wednesday of the following week, absolutely dominated it. Made huge margins on the gross and the net. And so my thought process, my hypothesis on this whole thing is, can I make big gross and big net following that same schedule? Thursday, Friday, that Thursday before OPEX and the Friday of OPEX, and then the following Monday, Tuesday, and possibly Wednesday. Can those be strong trading days for me for this particular strategy that we're working on? It's the only thing that I'm working on as far as stocks goes right now. And Libby and I have made a decision that if this does not go well, I'm going to focus my time, energy, and attention on the real estate side of things, which has proven us to give us a win in 2025. And so we know that we're going to focus on real estate in 2025 with some of the attention. And basically, if this sniping strategy goes well, that'll be where a good bit of my other attention goes. And then I'll still be a project manager. If this does not go well in the sniping, then I'm going to set stocks back on the back burner. I'm going to focus on real estate. I'm going to focus on, project management, and then I'm going to do the marketing thing as well. And that's where the extra attention of mine is going to go, unless it becomes its own position. And then I'll be able to just focus on that. And we're going to also be working on Libby's art business. That's another place that we see as something that proved itself to work really well in 2024. So we'd like to see further growth 2025. Now, one of the things that we're really excited about for this Palestine deal coming through is our profit margin will be somewhere around $10,000 to $15,000, and we're really excited about that. One of the things that we're most excited about on that is actually the fact that we are going to take 10% of the funds in tithe, obviously, and then another 10%. We talked about taking 20%, but we're going to hold back. We'd rather keep more money working, but 10% of the money we're going to take back for fund money. So that'll be somewhere between $1,000 and $1,500 of fund money. And we are going to get to go to the beach this summer with that money. So we as a family, our kids, Libby and I, have made some huge sacrifices in 2024. And so it just feels amazing to think about the potential of being able to get this deal closed and be able to pay to go to the beach in 2025, like a huge win for the Leiden family. And we're not going to be able to stay on the sand for that amount of money, but we'll be able to be just a couple houses down from the water. And we're really just excited that some of the hard stuff that we done, a lot of the sacrifice, because we made huge sacrifices to save up that initial money, including not going to the beach last year, and then invest that and multiply that over to be able to take that and go afford to go to the beach is amazing. And so basically where I'm standing right now is If the sniping works, we'll be able to build up capital much quicker, and it'll be a much quicker way to build up our wealth. We're still going to do boring stuff with that money, investing it 15% of our yearly income into the boring stuff because I always want to have, safe nest egg there. I don't want to go without a nest egg again, especially when we're building up capital. And, with the rest of it, we'd like to save up to buy a property and a home again so we can live in an actual house instead of a fifth wheel. If the sniping doesn't work, which I'm kind of in the position now where I'm not expecting it to work, but if it doesn't work, I don't want to get my hopes up on it. If it doesn't work, that's okay. We're going to pull all the money out of the stocks, and except for what we're putting in as far as our boring money goes, and we're going to put a little bit more money to real estate. We're going to build up and have our a little bit over a 3-month emergency fund. We're going to take that 15% of yearly income that Dave Ramsey suggests setting aside, and we're actually going to go from a 3-month emergency fund and spend 2025 building up to a 6-month emergency fund because we don't want to take the time to learn, which ETFs and stuff like that to put our money in. I mean, we could just drop it in the S&P 500 willy-nilly, but I really want to be a little bit more strategic about it than that. And we have this money on the side, coming in from real estate. We still got Odell, which is a smaller deal, and Hudson that are part of the NK Legacy Properties that that are kind of just stokes in the fire. Both of those deals are completely broke even. Odell won't have much profit to it, but some. And then Hudson, will have its turnout, and hopefully we get paid out on those in the year of 2025. So we have those payments coming in. We can build up the rest of our emergency fund. We can get more money deployed into these tax sales through 2025 and be moving on those different fronts. I can be working the marketing thing and working as a project manager and working on those fronts. And we can be working on Libby's art business. There's a lot of things that we got to do on that front. Libby's going to be rolling out new products. We're going to be going online, building up her online store, building up her social media presence. So there's lots of different things that we're going to be working on. We're kind of strapping ourselves in. 2024 was a really busy year, but a really hard year of pushing things down. Our hope is that 2025 we're assuming it's going to be a really busy year as well, but we're hoping that with that busyness, it's actually a year of lifting up. A lot of successes, a lot of wins, even if it's just a bunch of base hits from all the seeds that we've painfully planted in 2024 to see those start to come to fruition in 2025. So that's kind of our game plan as we're rolling here to the end of the year. The sniping started this week, and that goes from like 8:30 a.m. in Central Time, 8:30 a.m. to 9:30 a.m. And then I move over and I start working on the real estate stuff. But I'll be sniping this week, and I'll be sniping next Monday. Tuesday and Wednesday are actually Christmas and Christmas Eve, so I have no idea how it's going to affect things. I'm only going to risk $100. So max that I'll probably make over, this week and early next week will be, $200-300, but it'll prove that it works. And the next month when things are a little bit more normal, we can start building it up from there. 200. Once we double that 200, then we risk 400. Once we make 400, we're going to risk 800. Once we make 800, so on and so forth. Now, I'll only have probably 3 to 5 trading days a month to be able to multiply the funds. So the idea is that we'll make quite a bit of money, but only be able to do it a couple days out of the month. And then the rest of the month we'll literally, the beginning of the month will be allocated. Well, basically it'll look like, kind of mid of the month you have ChopX. So I'll be focused on the stocks. Right after that, I'll roll into all the due diligence for real estate and buying new real estate properties. And then at the very beginning of the month, I'll go purchase because it's the first Tuesday of the month. So basically, the first Tuesday of the month is when the tax sales happen, and the third Friday of the month is when ChopX happens. And so I'll prepare for for the tax sale, go buy the tax sale, and then over the next 2 weeks, I will focus on getting the surveys put together, getting the real estate agents put together. All that will be ready to go. And hopefully we're just waiting on surveys. I'll go through ChopX, and then we'll get our surveys back. We'll get the properties listed as I'm doing my due diligence for the next tax sale. And I can start creating a really healthy rhythm of doing some stocks and some real estate stuff. And then obviously, if the stocks don't work, then that time will just be allocated towards other real estate stuff to be able to grow more that direction. Sorry if you guys heard that. I accidentally just bumped the microphone. So that's kind of our game plan going forward. So when I have this title of going back to tortoise mode, it's really just this idea of focusing on the big picture, focusing on the long game. Obviously, if the sniping worked out, that would be absolutely amazing. Not to say that it hasn't been a long game already, because we've been in this game for a little over 6 years now and had lots of just good moments, but lots of tumultuous moments as well. Um, if the stocks don't work, we're not going to be crushed. We have a game plan going forward for that direction. If the stocks do work, it'll be very exciting. We have a game plan for going forward in that direction as well. So we'll just see how things go the rest of this week. I'll have an update for you guys early next week. Um, for how things are going on the sniping front. And with all that said, guys, been awesome hanging out with y'all. And before we go, let's say our identity mantra together. I explore the unknown. I conquer new frontiers. My journey is powerful and my wake is a wealthy legacy. And remember, guys, just like last week, I had a really tough week. With those new frontiers can come some really painful moments. But just because you have pain, just because something doesn't work right away, doesn't mean what you're working on is bad or wrong. It just means that it's difficult because you're figuring it all out. So that's I was encouraging myself with that. I encourage y'all with that as well. And the way we define wealthy here at the Wealth Legacy Journey is simply the ability to cover your monthly expenses without having to lift a finger. And the way we define legacy is leaving a long-lasting impact on others who come after you as they receive the fruit of your labor, whether that fruit be good or bad. So, last thing I'm going to leave you guys with is that quote that I said at the very beginning: a river cannot rise above its own source, but must stay plugged into teachers to rise above their level and instead of staying low at their own level. So, find a teacher. Definitely make one of those teachers Jesus. I'm just saying he's the best. And find some teachers to put in your life that have gotten to where you want to go and follow them on the path to get to that place. If you enjoyed today's episode, please like the episode. Please subscribe to the channel. Really helps us out. As a reminder, in the description of both the YouTube video and the podcast, there's links to a couple different Google Docs, the Wealthy Legacy Journey resources page, and the Wealth Health Checkup. With all that said, guys, this has been another episode dedicated to you and your own personal wealthy legacy journey. Go out there this week, crush it, take the right next step, and I can't wait to hear about your success stories on the other side. See you on the next episode. Bye, everybody.